Cool. All right, here we go. Looks like we're live. And I'm going on Facebook. Okay, we have a couple of viewers. Hello, everybody. Hello, hello. Whenever you're in, comment and let me know that you're here. All right. So it looks like we have a couple of viewers. So I'm going to go ahead and get started. First, I would like to say thank you guys for joining in, tuning in. This is for people who are looking to find their home, well, who have found their home and are looking for funding. Who I have with me right now is Crystal Barnes. She is the owner of NLG Mortgage. She was my lender in my past two home buyings. She is really, really good at what she does.
Oh, thank you.
She's gonna get you whatever she can, and she fights for her clients. Whenever she have a client, she's gonna go above and beyond. I can say that. I've been knowing Crystal for a good number of years. I don't know how long. But here she is. I'm going to let her have the floor. And I want you guys, if you have any questions about the home buying process or how to get your funding, she's going to let you know all of the requirements that you need in order to get funded for your home and the different type of loans that she can do. So, and here you go, Crystal.
Thank you. Yeah, if you guys have any questions, I can actually see the comment chat. So I guess if there's any questions, y'all can just ask in there. Thank you, Chastity. Yes, I've been knowing her for a while. We went through a couple purchases together. And they were we had some bumps in the road or whatever, but we got through it, you know. So it was great and wonderful. Love her and her husband. They are super fantastic. So I have been invited here. Trent, hey, how you doing? So I have been doing this for 15 years. Go on 16 years. I've worked at banks. I have worked at direct lenders. And I decided in 2018 to go on my own and open up an LG Mortgage. We are a brokerage out in Mandeville, but I can lend across the entire state. Just a little bit about myself. I am married. I have 3 boys, a 17-year-old, a 14-year-old, and a 20-month-old. So, and we live in Mandeville. We have a little puppy. The puppy is actually my logo. I have a little Frenchie. So, been living out this area for a long time. Grew up across the lake in the New Orleans area. Moved here actually right before the hurricane, so lucked out with that. But been living over here since. Moved over here for the schools actually. So, anyways, what I'm going to do is I'm going to talk to you guys a little bit about what the actual home buying process is. Obviously, like I said, if you have any questions, you can stop me at any point in between. But first part of the process, kind of what happens during the process is, first of all, we will take your application. We have an online application. We'll send you the link. You go in, put in your application. We will look at every single loan program based off of your credit, your income, how much money you may or may not have in the bank. All of those things are going to go, the area that you're purchasing also, all those things are going to go into how much you're pre-approved for, okay? So a lot of times people call and they're like, hey, what are your rates? Or, hey, how much money do I need down? It really just depends on the whole big picture, you know? I'll go over a couple different kind of loan programs after. And sorry, my little one is in the background, so if y'all hear him, just kind of ignore that. Sorry. So anyways, we pull your credit. A lot of people do ask, does it affect my credit when I get my credit pulled? We are a mortgage company. I have actually asked people over the years, how much does it drop your credit score when I pull it? It's 1 to 2 points, is it seems what it drops it. We are not a bank. What that means is when you go into a bank, the credit bureaus basically don't know what your inquiry might say. It's just going to say Capital One. That could mean a car, credit card, whatever. They don't know what you're getting. Ours will normally be, it'll say financing or for a mortgage, and they know you're mortgage shopping. So it doesn't hit you as bad when you're mortgage shopping, which is kind of a good thing. But we have to pull your credit. A lot of people are like, oh, well, can you just give me an idea without looking at my credit? It will not be an accurate idea of what you're really approved for, because we really have to look at everything.
Right.
And I'll go into credit a little bit after, but we pull your credit based off the debts that you have on your, hi, Chad. Chad joined. Based off of that's my brother, by the way. Hi.
Chad.
Based off of what is on your credit, so the debts that you are actually paying out on your credit, utility bills and all that don't go into it, will then come up with an approval amount. There's something called debt to income ratio, and basically what that means, it is how much money you have coming in monthly based off of your employment compared to what you have going out monthly as far as your debts. Okay. Every single loan program, there's a different percentage that number has to be on what type of loan and how much you will qualify for. So that's how we actually do come up with that number. We will come up with that number, and then at that point, I'll get in touch with your real estate agent, and I can give them a pre-approval letter. The approval letters, if any of y'all are actually working with real estate agents, a lot of times they'll say, hey, you need to call a lender and get approved. You don't want to start shopping for a house that you fall in love with and then you can't get it. Let's get you pre-approved, and then you know what you're approved for. When you find the house, you can go put in an offer. Most of the time, especially in today's market, it is a seller's market, meaning there's not a lot of inventory. So the houses are flying off the market super, super quick. And these sellers and listing agents want to make sure that the offer they're accepting is a legitimate offer when they're taking the house off the market for 30 days. And it's a client that's actually really approved. So that's what we do. We give you that letter, and that letter will ensure that, hey, look, you're really approved. You got your credit pulled. We looked at all your paperwork and everything looks good. Okay. Once you then at that point, you go, once you get an accepted offer, we will take that. We will then put together all of your numbers, as far as what's the exact amount of closing costs you need, how much you need for a down payment, and I'll explain what those are too. How much you need for either. Then we'll register. We send out this big package of loan paperwork, and that's when we start ordering everything. We do actually, we order stuff from the Social Security office. We order stuff from your employer. We order stuff from the credit bureaus. There's a whole bunch of stuff we have to order. So the loan process from the time that you actually put the offer in and we close the loan, depending on the loan program, is 20 to 30 days. VA and RD could take a little bit longer, maybe 30 to 45 days, because they have a little bit different process. But with all of that being said, we are in touch with you throughout the entire part of the process. I do have a team that works with me. I have a loan officer assistant, and I also have a transaction coordinator. So you are posted constantly about every 48 hours, if not more than that, on what is going on with your deal. And we will walk you from point A to B. In that time, we'll order the title, which has stuff to do with the property. What the title is to make sure you are who you basically say you are, and that the sellers selling the property really are the sellers of the property. Okay. Appraisal. You know what? Let me hop back on one thing. So you also do inspections. So your inspections you will do with your real estate agent. Appraisal you would do with us. The inspections are for you to see if there's anything wrong with the home, right? The appraisal is what we do is to tell you the value of the home. Like, are you purchasing the home for, if you're buying a house for 150,000, you have to make sure it's appraised for 150 and not 130, right? So that is the point of an appraisal. An appraisal has to be completed on a house. The inspection for you to know if anything's wrong with the house is not required, but highly advised that you get it. But you'll do that part with your real estate agent. So then we go through this whole entire process. Once everything is fine, then you go to closing. So when you go to closing, you will go to the attorney's office, title company, and y'all will close the loan. At that point, that's when you exchange keys. And after that, we don't ask you any more questions about your paperwork because everyone asks us that all the time. So, but that's basically, honestly, what the whole entire process is in a nutshell. There's a whole bunch of stuff that goes on in between that, but that's what the actual process of the loan is. So, does anyone have questions about the process or anything that happens during that part of the process? I don't know. I guess they ask questions in the comment section.
Yes.
There's a question. Yeah, because I don't think no one can talk, huh? No.
No, I don't see any as of right now. But I'll go ahead and start it off. So I know a lot of people ask what is the lowest their credit score could be. Also, which bureaus are being checked whenever you pull the credit score.
Okay. So a couple things with that. So when we do pull their credit, we pull what is called a tri-merge credit report. Okay. So we pull all three credit reports. You have Experian, TransUnion, and Equifax. Okay. Everyone always says too, why do I have different credit scores? Because they very rarely will be the same numbers. They all have different reporting systems. And like, let's just say TransUnion might be weighing your credit card balances more than Experian is. So that scores are always different. We don't average the scores. We take the actual middle score. So you have your high, your middle, and your low. We use whatever the middle credit score is. Pre-COVID, the guidelines were down to a 585. Some of the lenders are still going to 585. There's just it's a little bit more trickier. Right now, everything's basically down to a 600. So 600 right now is basically the lowest credit score that you can go down to. What the type of loan that you would do at a 600 is called an FHA loan. That's the Federal Housing Association. Basically, what that is you put down a down payment of 3.5% of your purchase price. Okay. So that 3.5% is your down payment that goes towards the principal of your loan. For example, if you're financing $100,000, you put down your 3.5%. So that $3,500 that you put down actually goes towards the $100,000, and you're paying down the principal of the loan. So that's kind of what the lowest is. Obviously, you can go anything above that. There is something called a rural development loan, which is RD. The lowest credit score on that is a 620 currently. A VA, which is 100% financing as well, if you're a veteran, right now it's also a 620. Then we have a conventional loan, which the minimum down on that is 3%. And that is a 620 as well. So you can do those. We have a bunch of other loan programs, renovation loans, construction loans, bank statement loans, like for self-employed people. If you do not, a lot of self-employed people file their taxes a little bit differently and have a lot of expenses they may or may not write off. And if you do have a bunch of expenses that you write off, there is a bank statement loan that will allow us to use the last 12 months of your deposits into your bank statement to qualify. Those loans are going to be more 640 and above is what those are going to be. But those are also there as well, which is great. We have down payment assistance programs. The down payment assistant just actually went back down to a 620. Found that out today. So they were at a 640. So, but now you can do those at a 620. Basically, what those are, let's say we're doing an FHA loan, it will give you your 3.5% down payment. It will give you the money for that. So if you have to come in with $3,500, the down payment assistant, if you're at least 620, will give you the 3.5%, the $3,500.
Cool.
So it'll give you that, which is great. And those are 620. So that's what those
So
are.
is that like a grant or how is that determined?
Okay, so they have a couple different kinds. Okay, so you either have a grant or you basically have what's called a silent second. The grant, we do have those, and that is literally you get three, and if you qualify for those are 640. Okay, so there's different there's different levels of it, I guess you could say. That you do not have to pay back in any way. It is a grant, it is given to you and never have to pay it back. Okay. There's also down payment assistance programs, the ones that you go to a 620. They give you the 35, let's just say they give you your $3,500 down payment, and it can go up to what the max of the 3.5%. Okay. The max amount on FHA. That is called a silent second mortgage, where so we do your first mortgage, the second mortgage, you never make payment on it. There's not a monthly payment. It just kind of sits there, and it sits there for 3 years. After 3 years, it just falls off. So what that basically means, just say you're in the house and you sell it after a year. When you sell it, that is another lien that's on your property for $3,500 or whatever the 3.5% may be, that has to be paid off. That gets paid off at that point. But the other one, if you have a little bit higher credit score, is you don't have to pay that back.
Okay.
There's a couple different kinds, but that's the difference between basically a grant and just down payment assistance. You know what I mean?
Right. So, what about work history? So, like, what about work history? How how long do
Okay.
you have to have worked?
Okay. So work history is it's a little tricky, but in general, you need 2 years of employment history. Okay. So that basically means that you do need a full 2 years. Let's say if you were a student just coming out of college, high school, or whatnot, and you go straight into the workforce. So we can use your schooling as employment history. And you have, as long as you were in school prior to those 2 years, once you're on your job for 30 days, we can use your pay. Okay.
Okay.
So, but we need some sort of 2 year history. Let's use another example. Let's say you were at,
Same job, correct?
huh?
It doesn't have to be the same job for 2 years.
No. Let's say you were at one job for 19 years and 3 months before you called me, you got a new job. Okay. So you've only been at the new job for 3 months. It doesn't matter. That's fine because we will go back. You can have 5 jobs in the last 2 years. We just need a 2 year history. You can have some gaps as long as your gap is not longer than 6 months. If you have a 6 month gap, you have to be back at work for 6 months. Okay. So let's say you were at a job for, I don't know, 5 years, and then you were out of work for 5 months and you went back. After you're back for 30 days, you're good. But if you were out for the 6 months in between, you'd have to be back for a full 6 months.
Gotcha.
So that's kind of how employment history works. A lot of people actually with employment history get really worried with they're like, oh my gosh, I haven't been at my job long enough. And
Yeah.
overtime and I get bonuses and all this. Different professions will matter. For example, for nursing, especially travel nursing, you're going to be at different employers, different hospitals. You might be part-time at one hospital and part-time in another hospital. We'll actually add them all up and we take the average for certain professions like that. So you can hop around. Pipe fitters, for example, welders, usually they work turnarounds. So it's okay that you do that. You can be at one job for 2 months, another job for 3 months, another job for 2 months. We just have to have consistency and show stability for the last 2 years. That's basically it.
Gotcha.
So yeah, so I don't, like I said, a lot of people wait, because everyone thinks it's just a straight 2 years, and it's not. You can have breaks in there.
Okay. Okay.
So yeah.
And they do have to have, or they do have to have tax returns, correct?
No. So
No.
here's how tax returns work. Okay. So if you're a straight W-2 employee and you don't have any commissions, we do not have to show your tax returns. Okay. We just show your W-2s. If you are self-employed, we do have to show your tax returns, because the only way we would get your income is from what you file on your taxes. Okay. So 1099 employees, so that would be somebody who is a contract employee. We have to show your taxes in that kind of job position as well, because you're considered self-employed. Okay.
Okay.
I
We
think
do.
there's a
We
couple
do.
questions.
We
Oh, are
do.
you asking me the questions,
No, no.
Chastity? Oh,
These
okay.
are my questions.
Oh, okay. I was gonna say I didn't know if you were running through there asking the questions. Okay, we'll go back to those after. I got sidetracked. What was I saying?
About the tax returns.
Tax returns. Okay, and so if you are commissioned, and 25% or more of your commission comes, 25% or more of your pay comes from commission, we will then have to show your tax returns as well. But every other situation, like regular W-2 employees, we do not have to show your tax returns, which is good.
Okay.
Only if you're self-employed, we have to show the tax returns. Now, if you have a new job and you really haven't had to claim it on the tax returns, and it's 1099 on the side, there's not really anything to show. We would write a letter of explanation, or do something like that, or do like a little small profit and loss statement. That doesn't have to be done by the CPA. We can actually help with those. So different situations, we have to show them, but not all.
You make it seem so easy.
Well, I tried to make it not as stressful.
So I'm gonna go ahead and go to the first question, Miss Erin, or Miss Renee. She said, "If you own your home, no payment, and need to renovate, but have a low credit score, what can I do?"
If you own your home, no payment. So I am guessing there must not be no mortgage on it
Right.
currently. And you have to do some renovations and have a low credit score. Okay. We have something called a 203K, which would actually give you money to do renovations on your house. We can do it that way, to where you basically you get a bid from a contractor on how much the repairs would be, and whatever those amounts would be, we would go. Let's say it's $50,000, but this is if you have no payment. So I'm gonna say if you have a mortgage, or if you don't. If you have a mortgage, say you owe 50,000 and you need 50,000 in repairs, and your house is currently not appraised for 100,000, then in that situation we would do a 203K renovation loan to get you the cash. This question, what I'm thinking is that there's no mortgage, so you have a lot of equity in your house. If that's the case, we can do what's called a cash out refinance loan. And let's say your house is worth $100,000, we can go up to 80% of whatever the value of your house is. So you would be able to get $80,000 in cash to do whatever it is that you want to do at your house. Now, as far as the credit score, different people consider low credit scores different things, but those actually currently, cash out refinance, you can go as low as a 600 currently, on an FHA loan. We could do up to 80% of the value of the house. If we put credit and it is not where it needs to be, we will send you to Chastity. And then you can help with the credit repair, and then she'll send you right back. Yeah.
Okay,
so we won't just ever turn anybody away. We have means and teams or whatnot, and we work together with everybody to get you guys to where you need to be. But that would be mainly a cash out refi to get you.
So what about that 203K? What type
203K? right now, I believe, is a 620 credit score is what it is. And the only reason you would do that is if your house didn't appraise. But if you don't have a mortgage on your house, you can take the equity out of your house. If you don't have any equity in your house, then you would have to do a renovation 203K loan.
Okay. All right. So you got that, Miss Renee? Stephanie said, why do different lenders say they have different requirements?
Well, so some lenders, there's something called qualified mortgages, and there's something called non-QM and QM, okay? Qualified and non-qualified. A qualified mortgage is basically everything that we were just going over. Different lenders take different loans. Okay, we are a broker, right? So we're set up with 19 different lenders, and that's why we can basically do any kind of loan that's out there that possibly exists. Some lenders don't want to take on certain types of loans. They may call them riskier. They may not want to take them on. So we have some lenders that say, I don't want to do an FHA loan under a 620. I have a lot of them that say that. And then we have some of them that are like, well, we'll go down to a 600. FHA, RD, VA, and Fannie Mae, which is conventional loans, they have their guidelines. Each lender, so that you have your base guidelines. Each lender then has they call it a lender overlay on top of that. So technically, FHA says they go down to a 535, but none of the lenders right now, because of the with COVID and everything, because we used to go down to a 535, they have decided and said, well, those are a little bit risky. We don't want to take them on. Mm-hmm. So that's kind of why there's different requirements. They put their overlays on there. But like I said, one of the reasons that we can do so many different kind of loans is because we have we're set up with so many different lenders that we have a lender for every type of loan, literally. We can do almost everything that possibly exists.
So really that's basically why.
Yeah. We'll fit you in something.
All right. So, Bjorn
Skills
asks, how long does someone have to wait before refinancing a mortgage?
So, okay. You have to wait after a purchase at least 6 months. So if you want to do a refinance after a purchase, you wait 6 months just to do what's called a rate and term refinance. So what a rate and term is you're just dropping your rate. And you can't use appraised value. You have to use your purchase price. Okay. You buy a home at $100,000 6 months ago. And you, in 6 months, you want to do a refinance and you get an appraisal and it's worth 150. We cannot use the 150,000. We have to use the 100. You have to wait for 1 year to be able to use your appraised value. Okay. So it's kind of two different things. So technically only 6 months. You technically have to wait.
Okay. Does anyone else have any questions? Okay, I have a question.
Okay.
A lot of people ask, or they have heard that they have to have so much money in their bank account before they could even apply for a loan or to get a home. How much money do they have to have saved
prior to applying?
Yes.
Technically nothing. On a VA loan, you don't need anything down if you qualify for that. On an RD loan, you don't really need anything either. Even if you have to come in with money. So the deal with bank statements, actually bank statements are, kind of honestly the most stressful part of the whole entire process.
Yes.
You know about that. So basically, you cannot have any large deposits that are over 1% of your purchase price in your bank account. Okay. So let's say you come to me and we do a loan and you need $3,500 for closing and you have anything in your bank. But over the course of the loan, over the next 30 days, you'll get paid twice and you'll have the $3,500. That's perfect. We can start the entire process but we just have to know by the about a week and a half or so before closing that that money's going to be in there without you making a big large deposit. It has to be money from work. You can use a 401k. You can use tax refund, actually, which is good right now because a bunch of people are about to, get their tax
Right.
refunds.
School refunds.
Huh?
School refund.
Refunds. You can use, which let's hope we don't have to use this, but if you get in a car wreck, we can use insurance money. Anything that is sourceable. You can't take cash from your house and go put it in your bank account.
Right.
We can tell you ways to get the money into your bank account over the course of time. We have to show 60 days of bank statements. So anything before 60 days, we don't look at. So it's only the most recent. So it's a month you're closing in, like right now. So we're in the beginning of March. We would need to show January and February statements. But you don't have to have anything in there. NSFs, while we're talking about bank statements. So NSFs also, it's okay if you have some NSFs on there. We have to have a reason for it. And I'll help you write a letter of explanation. Most of the time there's a good letter of, a good explanation. You might have had a new bill draft out that you didn't have before that was supposed to draft on the 15th, but it came out earlier than what you thought it was supposed to. As long as your bank account is not ending in a negative, or you don't have, like, we'll take the year to date of the NSFs, and as long as you don't have like 5 times a month your account's going in the negative, then most of it's self-explanatory. Again, write a letter of explanation and get that to go through. So yeah, that's how we do that.
Okay. I had another question. So I know we talked about the grants. How does the lender automatically put in the grant, or
So you actually have to go to with the different grants. There's some different classes, but you actually go to, and we could give you a list of them, but you just go. Some of them are just online, and some of them you have to actually go sit in a class. I mean, they are literally like, don't forget to bring your trash out. Make sure you keep your house clean, and make sure you pay your bills. And it's just like a little class you have to sit through, and then you get a certificate. Once you get your certificate, you won't actually be given any money. It's all on the back end. So it's all on your paperwork, but we put that on there basically as a government gift. Okay. When you take your class and have the certificate, that's your proof that you qualify for it from wherever you're getting, from whatever one we decide to do. Then we will, on the back end, you will see a gift on your paperwork for whatever that amount would be.
Okay.
So that's kind of how that works. So you don't, oh, you know what else? Talking about a gift. Gifts. You can get gifts from a family member for your down payment. So back to your question about the bank statements, do you have to have any money? If you're getting a gift from, it could be mom, dad, brother, sister, aunt, or uncle. You can get a gift from them for the entire down payment, your entire down payment, the whole amount. So you can also do that for a gift. And well, actually, you never want to put that in your bank account. We get it wired to the title company, and individually I could go into more detail about that because it's kind of time consuming. But that also, you don't actually exchange the money. It's on the, well, you exchange it between the title company, but you don't get that either. That's just kind of on the paperwork as well. And then closing costs. I don't think we talked about closing costs. Closing costs, if y'all have heard from that, the seller pay your closing costs. Your closing costs are separate from your down payment. Your down payment is actually the amount that you need to put down to qualify for the loan towards your principal. And then your closing cost is going to be, your homeowner's insurance, your first year homeowners, your a prorated amount of property tax. You will also have some title fees, the title company, for closing the loan, putting together your paperwork, running the title work, making sure there's no liens on the property. You'll also have that the seller can pay for. So, and we'll, again, we go over that individually. It can be all kind of different amounts depending on your loan amount is how much your closing cost would be. Um, so that is another thing too that we could talk about. Flood zones. We have a flood zone question. Just talk about flood zones. Okay. Flood zones. So there are a bunch of different zones. You have a bunch of flood zones with A, E, A10, just A. Those are going to be the flood zones that are actually going to have your highest flood insurance. Flood zones B, C, and X are going to be your cheapest. Okay. If you purchase a home in flood zone B, C, or X, I do not have to collect for flood insurance in your monthly payment. Okay. You will pay your insurance agent outside of the closing once a year. You will pay for your flood insurance to them. What I mean by that is, so homeowners insurance. Oh, anything. Okay, sorry. Anything with A, AE, A10, we actually have to collect that in your mortgage. Okay. If you're in B, C, or X, which is ideal, we don't have to collect. Okay. The escrow. So what an escrow is your homeowner's insurance, your property tax, and if you have flood, your flood insurance. It is in your payments. So when I give you your approval amounts and I give you your payments, those numbers go into your approval. Okay. On how much you're actually approved for. So the sorry, y'all. It's how much you're actually approved for. So when you make your monthly payment every single month, your mortgage company is going to collect for your homeowner's insurance and your property tax and flood if you're in a flood zone. So when it comes due, everywhere in the state, property taxes due, excuse me, in December. New Orleans, it is due in January. Okay. So if you get a bill in the mail, you don't necessarily have to pay it. Your insurance company, your mortgage company is going to cut the check for it because they're collecting for it every single month in your mortgage payment.
Okay.
So that's how that works. Okay. I think there's what, wait, hold on. I thought I saw a question on there. Did it disappear?
Let's see.
What type? It said what type of flood zones or something.
What type of mortgages or different type of mortgages qualify for flood zones? Is it any?
Oh, okay. So you can have all mortgages, all single family home mortgages can have flood insurance. Okay. You can be in a flood zone. Okay. The only one that you really can't is a mobile home on an FHA loan or an RD loan. They really don't want them in flood zones anymore. So meaning flood zone A, AE, A10. B, C, and X are fine. And that is only for a mobile or manufactured home. We do lending on those as well, mobile and manufactured homes. You just cannot finance those into, you can't do a mobile home in a flood zone. And that's actually a newer guideline. Every other house you can have, it could be in a flood zone. We just have to collect it in the mortgage if you're in those A flood zones. Even if it's below base elevation. So there's something called an elevation certificate. And we would get that. And from the seller usually gets it. And that will actually tell you what flood zone you're in and whether the house is below what that elevation level is for the area or if it's above. That's going to determine the price of your flood insurance, which that goes all into insurance and all that kind of stuff. But it does make a difference on your qualification if your insurance is higher,
Okay, so question: if someone has a lender right now and they're like in the process, not halfway, but they're just beginning, can't they still shop around for lenders?
Yeah, absolutely. You can shop around as much as you want, until you just have to look at the timeline on your contract. And as long as you have time, not a problem. You don't want to go mortgage shopping 2 weeks before closing because, at that point, you're going to affect your, getting your house. But you can shop around even if you're in the process of being approved, and everyone's got different deals. I mean, I have people I talk to all the time that have talked to other lenders, and the lenders just kind of shut them out. Oh no, this is going to be too complicated. This is going to be too hard. I don't want anybody to ever think they can't get approved. We never turn anybody down. We will always give you advice on what you need to do. We might not be able to do it today, right now, but we will tell you exactly what you need to do. We will say, go pay this off, go pay that off. I mean, there's even people who are approved. They might have a 620, but their debt to income ratio that we talked about before, they might have a bunch of bills. So in order for them to qualify for the price range that they want, we might say, well, you go pay off these 2 credit cards, not for credit purposes, but for income purposes. Then instead of you qualify for 200, you can qualify for 250. So we'll even point people in the right direction for that. I don't like turning people down. I think everybody should have the opportunity to own a house. But there are a lot of lenders out there who will just, they're like, no, that's too difficult, or that's going to take too long.
Right.
But, if you guys, if y'all want, if people want to do it, like I'll tell people what to do. And I have clients who we never hear back from, they'll never, they may not want to do it. They may not have the funds to do it, or whatever the case may be. What I would highly suggest throughout the loan process is you only listen to your mortgage lender. Do not listen to someone who has bought a house last year, who has bought a house 6 months ago. Don't listen to that, because everybody's going to tell you I had I had 800 credit scores and you need 20% down. It's not true. It is not true. So don't just listen to what anyone tells you. Just talk to your mortgage lender, because you'll get misinformed, and then you'll be renting for the rest of your life because someone told you need a 20% down.
Right.
Or you need a 700 credit score.
And while they're shopping around, will that affect their credit score if their credit keeps getting pulled?
So once you are pre-approved and a lender has you pre-approved and you go get your credit pulled, that lender knows you got your credit pulled. We all have like little alert systems, and we know that you did get it pulled. Can it hurt your credit? Yes, it's a hard inquiry. It could drop you 1 or 2 points again, every time you get it pulled. However, as long as your credit lasts for 120 days every time it's pulled. So we'll only pull it once as long as we close within those 120 days. We won't pull again unless there's the need to pull it. If there's like all these alerts that are coming over and you're getting like ding, 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 we're going to have to re-pull to see if you opened up anything else.
Right.
Because, I mean, when people go do that, we approve them, and then they'll go lease a car because they think that that's not the same as a purchase. It's the same thing.
Do not buy
don't buy anything. Don't get your credit pulled. Don't buy anything. Don't even try and turn your cable or your electricity. Nothing. Don't buy a cell phone. Don't do any of that. Yeah. Because it will it alerts us, and then we have to. We never want to re-pull credit. I mean, we really don't want to. So it's best to not do that. Buy anything. Once you're pre-approved, leave everything alone. Don't do anything else.
Okay, we're gonna go ahead and wrap it up. I know you have to go.
Sure.
Does anyone else have any more questions? What is the best advice that you can give a person who is searching for a new starter home?
You guys, the best advice is to get pre-approved. You need to get pre-approved. Don't believe what you hear. Don't believe what's on television. Find a mortgage lender. Call me or our team or anyone on our team. And you have to find someone who's willing to educate you and explain the process. You have to get pre-approved because you don't know what your price range is. You have no idea. And like I said earlier, you never want to fall in love with something you can't get ever. You never want to do that. Or you don't want to get something that is way cheaper than what you qualify for because you didn't think you were approved.
Right.
Best advice is talk to your mortgage lender. You don't really want to go get your credit pulled a whole bunch of times because that will drop your credit. Find one person, stick to it, listen to what they're telling you. And you want to make sure you're keeping up your credit. When it comes to credit cards, keep your balances below 25% of your credit limit. And we will, sorry, I was reading another question. And
That's
your
Trent.
credit will be higher. Huh?
I say that's Trent.
Is that who that is? Oh,
Yes.
okay. I was like, Williams Financial. Okay, Trent. Trent. Wait, if the deal is looking ugly and things start to fall apart, what can we do? Well, we can switch lenders. That's why we're a broker. We have 19 of them. We go to a different lender.
Yes.
Kidding. Well, yeah, it's kind of true. But no, I mean, we just have to communicate through the whole entire process, y'all. Communication is key. Don't ever do anything. Don't ever do anything before asking. Ask us every single time. Listen to what we're saying. Just ask. If it's falling apart, there's always a fix. As long as it wasn't because you went and bought a car or something in the middle of the process that messes up your income. Besides that, we can pretty much fix everything. Don't switch jobs in the middle of the process. Don't quit your job just because we're like, oh, we're closing in a week, so you don't want to do that. He's asking, what is a buyer?
Stop. We are about to go.
Okay, so Trent just asked a question. What if your buyer switches realtors right before closing? I experienced that for the first time when I was helping and Chastity get their house. Their realtor decided to switch in the very middle of the process after being under contract.
For 2 months.
It was very interesting. I've actually never had that happen, so it was something that we kind of had to learn. But you can get the end of the contract switch, and then you switch. It's very interesting, but
resign a whole bunch of paperwork.
A lot of paperwork. Yeah, it really is a real question. I mean, y'all, I think I've seen it all, and no, after doing this for 16 years, I have not. There's so many things. Oh, why can't you see Trent's? Oh, they can't see the questions. Y'all can't see everyone's questions.
Oh.
I don't know. But does anyone have anything else? I mean, I'm trying to
contact you. What's your contact information? What's your phone
number? So you can give us a call. If you want to put it in there, my cell phone is 985. I don't know if y'all can see that. 985-276-0830. And if you guys want to put y'all's email, who's ever on here, if you want to put your email in the chat, we can actually send you an email and touch base with you so that you guys have all of our information. There he goes. Trenton. How are you?
What's up?
Good.
You teaching these people something good?
Trying. I'm attempting. I hope so.
They know you're the best in the business yet?
I mean, I'm hoping. You gotta tell them how good I am.
Well, I mean, how in detail do you want me to get? Because
let's do it.
Anthony Gilliam. He left his email.
Okay.
And what's your phone number? What was your phone number?
Me, 985-276-0830.
Okay.
What story you want me to tell them? I mean, we got so many.
No, we're about to.
I don't know. Pick a good one. There's a few.
She don't want me to tell the story. All right. I guess I can't tell the story.
All right. Yeah, I've been knowing these guys for a while. I'd say. So, but yeah, I appreciate everybody joining. We'll probably do another one. We'll keep you guys posted. If y'all come up with any questions, again, y'all can always contact us via text message. We'll try and get emails out. Our email, if you want to put my email, it's Crystal, CRYSTAL at nlgloans.com. But yeah, look, Stephanie's my loan officer assistant. So she is on my team, and throughout the process, when you're dealing with this, you'll deal with her also a lot. But she said it's become family. True.
Hey, that's my girl right there.
That's right. Stephanie keeps us together.
Hey, I'm gonna tell y'all something. They be fighting for you. I mean, that's one thing I can commend them on. They will fight through the whole process from beginning to the end. Just like that situation where the homeowner switched realtors on us at the very end, you know, which it wasn't their fault. They had a situation, but
Oh, I don't know Rainy. Hey, Rainy.
Yeah, so Rainey's our transaction coordinator. So she came on with us about 6 weeks ago, maybe.
Oh, that's why.
I lose track of time. Yeah, I lose track of time. But yeah, so Rainey is our transaction coordinator. So you will also deal with Rainey. She also keeps us together.
But yeah, she's done. We've been through
Two homes.
More hell than you can imagine in both.
It was interesting.
This is the last one we dealt with stuff that we coming up with writing books of stuff that we just found out how to do.
That's right. We got it together. It was extremely interesting. It was an interesting one. There was all kind of stuff going on with the seller. It was interesting to say.
Very interesting.
But we got there.
Want to close out?
We got it done.
Yes, we did. Made it happen. So.
You want to close it out? All right. So look, I guess we get to do something. Oh, well, let me see him.
You're okay. Sorry.
I want to see the baby.
You want to see the baby? Well,
hey.
If y'all could see what he did to my floor while we were doing this.
All right, so look, y'all.
He just stood up and hit his head on the table. He was underneath the table.
So look, y'all. Look, we're about to let Crystal go. We're about to go because I think I got to cook. So look, this is a great company that she has. She's done so many amazing things. Just for us alone. So I know the work that she does for other people. She's gonna fight for you. She's gonna get you the numbers that you want. You might have to do a little work, but that's part of the process. One thing that you can never forget. One thing that you can trust for sure that every new home, every home that you try to purchase, anything that you're trying to do as far as this realm of home ownership, is every deal is going to be different. The best thing that you can do is step out and try your car. This house that we're in right now, we looked at this house before we even got all the way approved for it. Like, we got this approval number, and then we looked away from it, but we really wanted it. But she worked it out so we can get the exact number that we needed, like exactly. And
we did it.
Yeah, so it's possible. It can be done. This is some good information.
And again, she can be reached at crystal@nlgloans.com. Or you can contact Rainey at nlgloans.com.
You keep pressing the come up. Boom.
Or you can shoot her a text message at 985-276-0830. Again, this is your loan officer. She will get you approved for funding if you need it.
She's gonna make it happen.
Just feel free to contact
my biggest fan.
back with you.
I promise you. Hey, look, you made it happen both times. I'm like, if I need anything.
It was fun. Y'all are fun to work with. Y'all are super fun.
And don't forget to leave your email addresses in the comments.
All right.
Alrighty, we're gonna log off. Thank you guys.
Thank y'all. Thanks everybody for joining. And next time we're on, if you need anything, just let us know.
Have a good day.